I'm honored to be joined here by our keynote speaker, Mr. Sudarshan Sen. Mr. Sen is a former executive director of RBI, having spent almost 37 years there. He also holds a bachelor's and master's in mathematics and an MBA in banking and finance. We're extremely privileged to have him here, and I'm looking forward to his keynote thoughts. So over to you, Mr. Sen. Thank you for being here.
Thank you, Aryaman, and a very good evening to all of you, dear friends. It's really a pleasure and a privilege to be a part of the very first AA community event, bringing players from all across the ecosystem, now AA ecosystem. My mind goes back many years. In fact, it goes back to early 2014 when, in the budget, the finance minister, he said that the dream was to create one record for all financial assets of any individual. And there was a presentation made by the Department of Economic Affairs to a subcommittee of the Financial Stability Development Council, headed by the Reserve Bank governor. And in that meeting, it was decided that the RBI would be tasked, not precisely the RBI, actually, an interregulatory technical group comprising of the financial services regulators would sit together and try and examine the feasibility of creating an institutional framework for providing account aggregation facility to the customers of different, availing different financial services. So there were a couple of subgroups which are created to get into the nitty gritty, and based on these, sometime by the end of 2014, a report was presented by this interregulatory technical group, having representatives for RBI, SEBI, IRDA, PFRDA, and they gave a report saying as how it could possibly be done. And it was decided that RBI would spearhead this effort for account aggregation. And in this, now I'm very happy and I'm very proud to say that right from the time we started this initiative in the RBI, I had the privilege of being associated with it. And so it has been a great journey, and it's wonderful to see where it has come. And, the interesting thing was, account aggregation isn't strictly it's not a financial intermediation kind of service. No funds are really involved here. So it was difficult to kind of, regulate these things. How does RBI regulate this? So RBI, there is a particular enabling clause in the RBI Act, which enables, the government to declare anything an NBFC practically. So it was decided that account aggregators would be one of the categories of NBFCs. And then, as you're aware, as was mentioned in September 2016, RBI came out with the master directions for account aggregators. And as you know, the account aggregator framework basically is about, you need a financial information provider with a customer, and the customer gives an explicit consent, which enables the account aggregator to pull data from the financial information provider and then, present it both to the customer and to financial information users who might be useful to the customer. And the core of this is that this is a real-time flow of data. It is not stored and used by any third parties. While in transit, it cannot be stored by the aggregator. So these directions this whole framework requires very strong data security. It requires very strong confidentiality. And these are ensured to some extent, by the consent artifact. And there has to be a very good grievance redressal mechanism in case things don't work out exactly the way we want them to. And in view of the very sensitive nature of this data interchange, the directions do not permit account aggregators, to carry out any other activity, so that there is no conflict of interest, and that the sanctity of the whole pipe, the data pipe and its usage, is maintained. Now, the nature of activity undertaken by these account aggregators require consolidation of information of assets held by an individual across various financial sector entities. And as these businesses grow, the institutions across different regulators would be talking to each other over their respective electronic platforms and, say, the core banking solutions, for example. And if there is a sine qua non for orderly growth and smooth functioning of this framework, it would be the seamless movement of data from different institutions to different institutions with complete confidentiality and with, again, I never tire of saying this, explicit customer consent. And such flow of data would require some generic technical standards. And these technical standards typically would have to ensure that the data is duly authorized, that the movement of data is secure, and that it is smooth, and it is consent driven. And another very important point is interoperability. We would need interoperability of systems across the framework so that there are no barriers, so to speak. And you may be aware that iSpirit and the Reserve Bank of India and Reserve Bank subsidiary Rebit worked very closely together to frame the technical standards that account aggregators, FIUs, and FIPs have to follow. These are administered by Rebit and are reliable. They are platform agnostic. They have robust data governance standards, and they are very easily adaptable for future technological changes. And to my mind, this AA framework has been a game changer in empowering the customer to have control over what data is shared, with whom it is shared, and for what purpose. The use cases that this AA framework has pioneered are growing in number and scope, and the very wide-ranging data empowerment and protection architecture, DEPA, is its generic and logical extension. And I'm sure we will all see amazing and very fundamental changes in this area. At its heart is the commitment to empower the customer, protecting the confidentiality of her data, enabling her access to diverse financial services based on information that ensure that she gets the best deal possible. This will be a focus area for financial services regulation in the years to come, because the customer is increasingly becoming the center of what financial services entities do. And in this information age, again, it's all about the customer. And therefore, information silos built by entrenched financial services players, I'm sure will be dismantled over time. We may very well see something like the open banking directives, which are being followed in Europe and the UK. And I think the account aggregator framework is the first step and a major pioneering step in that direction. So I'm really looking forward to hearing what all of you have to say and sharing your experiences over the next hour or 2 hours. So I'm really looking forward to that. Thank you very much.
Thank you so much, Mr. Sen, for that extremely crisp and articulate keynote address. Audience, can we please have a warm round of virtual applause for Mr. Sen? Thank you not just for the words you shared with us here today, but also the hard work that you and your colleagues in RBI have done over the years. It's your erudition and work ethic that's resulted in us being, I believe, positioned to become leaders in the world of open finance. So thank you once again, and it was a pleasure to have you here. Audience members, please stay tuned. We'll be back in 2 minutes with our next session. Thank you once again, Mr. Sen.
Thank you.